It's your boy Kobus, the realest OG. Inspired by the ghost in the machine. Okay. There's some noise in the background, but I'll try to play some music in order to reduce it. Let me just. It's 2222222. Wow. 22 plus 22. Okay. Hope it's not too loud. It's been some time since I posted. I don't know when was the last time I posted. I think it was probably 2 months ago. Yeah, I just needed to take a break from posting. I felt like it, in a way, it puts pressure on me, sort of like I have to like deliver, But we haven't stopped looking at the charts. Let me just confirm when was the last time I posted. Well, some of the videos I still post them, but I just prefer to put them in private mode so I can be the only one who views them. Okay. I just didn't feel like putting someone public because I feel like sometimes you just need to take a break and go. Yeah, that was 6 months ago. No, it was actually 2 months ago. The last video I posted was on the 18th of July. Okay, so I'm going to sort of just explain what I see, not on EURUSD. EURUSD and GBPUSD have been refusing to move lately, so I just took a break from them. I'm looking at Ethereum and Bitcoin at the moment, so I'm not going to talk about the past trade which I took. I'm just going to talk about what I think is gonna happen going forward. So what I see is that there was a divergence today, okay, from between Ethereum and Bitcoin. Bitcoin took the higher highs, if you can check it. So just that I'm using my tablet, I'm not using my PC, but there was a divergence between Bitcoin and, let me see if it's gonna be able to put it. If I put it on my PC and then will it appear that side? Okay, nice. So there was a SMT divergence between Ethereum and Bitcoin. If you can check, Bitcoin took the higher high. Okay, it made a higher high, but Ethereum, it failed to do so. Okay, so it failed to take that other high. So we have this. So either way, even on this high here, we failed to make a higher high. We made a lower high. Okay, even on this one, SMT. Okay. But you can see I wrote buy side liquidity there, so I take that as engineering of liquidity. We are going to visit that place later, but for now what I see is we had an SMT divergence, and then this structure failed to hold price. Okay, it failed to hold price. This inverse gap here, it failed to hold price, so it's a bullish structure. So when a bullish structure fails to hold price, I view that as a way of, now we are turning bearish. Okay, so what I think it's gonna do is we fail to respect this 4-hour favor gap, and we just created a newly 4-hour favor gap, bearish one. Okay, so I'm expecting the market to some sort maybe to come and retest this zone. Okay, maybe retest this gap, but I would like to see the market come to this, more especially the newly created favor gap, the bearish one. I want to see the market come here, and then I would watch how it reacts away from this gap. If it displaces above, I know that we are going for those highs. But if we reject this place and then we start to form some market structure shift on a smaller time frame, like 50 minutes and 5 minutes, then my focus will be on this. If you can see, this was the initial consolidation or accumulation before this prior expansion, okay. So we had built sell side plus buy side, but now the buy side has been cleared. What's left? The sell side liquidity is still intact. So a reaction away from this gap, I will now know that okay, market now is ready to attack the sell side. Plus we are in premium. If you can check, we did close. I don't know how to turn this thing on my tablet, but it's, the magnet is on, so it makes it difficult to I don't know what the hell is happening, but I'd like to remove it, the magnet, because it makes my life hard in terms of trying to point out things. Let's be here. Anyway, I think that's just going to chow our time, but yeah, this is what I'm currently looking at now. You can see that we had a very bullish price leg. Okay, so I'm expecting the market to somehow come and visit discounts. And then what do we see here in discount? We can see that we have two bullish imbalances. Okay, so we will also look at how the market reacts away from these zones. Okay, this is a daily FVG. Below it again, there's a daily FVG. So as you know, we are just going to watch how price reacts away from those zones on a smaller time frame, like 1 hour or 4 hour, or let me just say between 1 hour and 2 and 4 hours, because a clean setup can also form on 2 hours or 3 hours or whatever. But the point is, we're going to watch how the market reacts away from this zone. Okay, so yeah, I just wanted to post that. I just felt like it's been some time since I posted. I think I'll post more content maybe after the exam season, because now I'm in my exams, so I don't think I will be paying too much attention to YouTube and the market. I'll just focus on course, and then later I'll just post content whenever I feel like posting. But yeah, currently guys, you can see how those lows here, the sell side which I just showed them, those like these lows are very the two clean, if I may say, they are relative equal. So these lows here, they are relative equal. These are relative equal lows. There is liquidity resting below these lows, and then you can see how the current price, the low which we just formed here, it didn't clean those lows. It just went next to them and then it rejected. Where is it going now? There's a 4-hour imbalance which just formed. I also wanna let's break down how the price how it broke structure here, and there are very important factors which I would like to highlight. Okay, so the market, what it did is the market started by sweeping this small liquidity, the buy side liquidity. Okay, and then what did it do after that? It slammed through that 4-hour bullish fair value gap. But first, it started by respecting it, it retested it, and then it cleared the liquidity. I actually participated in this move during the day on 15-minute time frame and 5-minute. There's actually a good setup there which occurred. And then what it did is it cleared the buy side, and then after clearing the buy side, it slammed through the bullish fair value gap. Okay, the 4-hour one also closing below this. Under there's this saying which I like to use, as I say, under normal bullish circumstances, I'm expecting this fair value gap, this 4-hour bullish fair value gap, this one, I'm expecting it to hold price if we are truly bullish. But the moment we start to disrespect it, there is a signature there. The market is trying to tell us that it is no longer bullish. Maybe it is changing structure. So now we are changing the buyers. The buyers now, it's no longer too bullish, it's bearish to a certain point. So the market will tell us next when it wants to turn bullish. But for now, I think we are bearish. We disrespected the 4-hour fair value gap, and then we closed below this candle. So we closed below this candle. To me, that is my change in the staging delivery on market structure shift. Because from my experience in the market, if we are truly bullish, I don't want the market to trade below that candle. See this? I don't want to see the market trading below it. This candle here, this consecutive candles here. I don't want to see the market going below this candle if we are truly bullish. And then if you can see there, we have this opposing candle, the red candle. I'll just delete the other. If you can check here, we have this red candle is also a very important candle for me, because if we are truly bullish, I expect the market not also to trade below that candle. It is my bullish order block or whatever propulsion block. I just know that this candle, it usually holds price. I don't want to see the market trade below that if we are truly bullish. But now we traded below it, and we also traded below those candles which I just highlighted. And if you can check, we did print, the market printed a bullish order block before it went down. This candle is a very important candle. It is what I'm going to use now. I'm going to expect it to hold price down. I don't want to see the market trade above that candle. The moment the market closes above that candle, I'm shifting my bias to bullish now, but for now I think I'm bearish on both Ethereum and Bitcoin. So we'll just switch to Bitcoin and Ethereum. They did. I mean, I don't have to explain much on what you're seeing here. So we can see that on this Bitcoin, we did sweep some liquidity there. After sweeping liquidity, what happened? There was a big displacement to the downside. Okay, so when the market, if you can check, when the market was going up, it never traded below these red candles here. I'm just going to highlight them. It never traded below these red candles here. Okay, even here we were bullish until this place. But now, after we had reached a certain level of liquidity or level of price, the market started to trade below those candles which were holding price up. What does that signal? To me, I take that as a change in market structure. Now, okay, the market now is signaling me that it's shifting direction or it's changing direction. And if you can check the amount of move or the momentum of the move we had when we were disrespecting those candles, it was very aggressive. Like this red candle here, this candle, there is velocity there. The velocity, like there was speed plus momentum. Speed and velocity, I think we can use them interchangeably. Just that one does not have direction and another has. But if you can check the amount of speed the market and it broke those structures there. There was speed there and momentum. So by speed I mean how fast did it take the market to break those structures there. And then momentum, I'm referring at the amount of move. Okay, the amount of move it took to disrespect that level there which I just highlighted. To me, you see this, the level which I just highlighted there, those 3 consecutive candles going up. Okay, these 3 candles. No, what am I doing? These 3 consecutive candles, they are now going to act as my bearish order block, and then I'm going to pair that bearish order block with this green candle here. See this green candle here, this green candle here. I'm going to pair it with so I have a lot of structures which I can use to hold price down there. Is this green candle, those 3 consecutive green candle going up, and the newly printed bearish order block. I'm expecting it to hold price down. My tablet is on 3%. I'll get back to them. Yeah, but yeah, anyway, this is more or less the same as Ethereum, and I like how this price is so clean. Yeah, and then we're going to watch how the market reacts away from this current fair value gap. Okay, I don't want to see the market displace above this current fair value gap. If it displaces above it, then my bearish scenario inside this, like I'm going to look for a bearish model inside this for our fair value gap. But the moment we displace above it, that idea or that concept, that selling, I want to use a proper word for this or proper term. Like that trading idea becomes invalid if we displace above this fair value gap. So what I'm going to do is I'm going to monitor how the price reacts inside this 4-hour fair value gap, and then if we get, sorry about that, I thought I did focus mode. Anyway, I would like to see the market You see what just happened here on 4 hour gap, because uh, because price is fractal in nature. I would like to see the exact same thing, which just like you see this type of price leg here, this type of price leg here. I just deleted that premium. See this type of price leg here. I would like to see something like that happening on a smaller time frame, like 5 minutes and 15 minutes. I don't want to go beyond that because there's a lot of noise on smaller time frames. But yeah, I'm going to monitor at how the price reacts inside this gap. And where is my lowest hanging fruit? This is the lowest hanging fruit I see, followed by this. So for now, my eyes are on those lows. I want to see how the market is going to behave in those areas. So yeah, and then we may not get a, what's this? We may not get a setup on the lower time frame, and that is fine. We're just going to monitor price as it moves. Yes, we're just going to become like snipers. You know, a sniper does not just shoot, he waits. I actually have a scene here which I just wrote to myself. When in the beginning of the trading journey, it's humbling. The trading is humbling. It's also humbling now, but as time goes on, you you learn how to regulate yourself. You don't chase the market, you wait for it. I wrote, trading is like being a sniper. You have to wait for the clean shot. And then I further wrote, wait for your setup to outline itself. Do not chase the market, let it unfold. Be an observer. I know it's not easy, but you can do it. So it's not easy waiting, and the more you fail to wait is the more you hate yourself. But the more you wait, it's actually the less you hate yourself. Yeah, yeah, guys. This is what I have for today. I hope you find this thing fruitful, this video fruitful. I know it's not the best quality, but when the right is time, I will improve. I'll actually buy a mic to reduce the noise, and then maybe get a pen. What's this? Yeah, not a pen, maybe a tablet which allows me to use a pen so that I can record easily. I actually enjoy more recording with a tablet than a PC, because with a PC, my PC is very old. Sometimes it jams, sometimes, especially when it comes to recording, it doesn't support it. I can record, but you won't hear me. I won't hear myself. So this tablet, it makes my life easy. So that's what I have for today. Peace and love. I'm sending out.